Hello everyone, this is Kathy Lien. If you give me a second, I'm going to share my screen. Make sure it's on the right monitor. Okay. Hello everyone, this is Kathy. If you can hear my voice, see my screen, please type in yes into the YouTube stream or into the Ask Kathy box on our Discord. Let me know that you can see my screen, hear my voice, and let me know that everything's working. This is my first time using a splash screen along with some music. Let me know if that actually came through. I mean, I guess I can watch later on the replay and I'll be able to see, but I, just was testing stuff. My husband was telling me that this was terrible music, that I should pick something else. So I'll have to work on that part. But, it's slow moving in the right direction. All right, so let's get started. Welcome everyone to Kathy's Caffeinated Market Buzz. Grab your cup of coffee or whatever is your vice this morning, and let's talk about the markets. So, as you may know, we have had a fantastic US dollar rally last week. We had blowout would be an understatement in terms of the US non-farm payrolls report. The data from the US, the jobs number was pretty much double expectations. The average hourly earnings was strong. We also had upward revisions to last 2 months of jobs reports. So overall, the number was very, very good. And that came after a very clear Federal Reserve. I mean, basically, Fed Chair Powell couldn't be more clear when he basically said he does not see an interest rate cut happening in March. I mean, it was what the market was hoping for, and he pretty much said it point blank. And we'll take a look at Fed Fund futures in just a minute, but that strength is carrying over into this new trading week. The US dollar traded to its strongest level against many of the major currency pairs year to date. It's obviously not very long because it's only 1 month, but still a 2024 high set today in most of the major currency pairs. And, US yields are up sharply, and stocks are finally responding to what the higher US bond yields mean and a delayed rate cut means for the financial markets. For those of you that don't know, basically, when the Federal Reserve lowers interest rates, that kind of lowers borrowing costs for consumers and businesses, and that's good for business and good for stocks. But when you have the central bank saying no, definitely not March, and we'll see about May, then we're in a situation where borrowing costs are rising. U.S. yields are up 1%, and that rise in U.S. yields is actually going to raise borrowing costs. And if you also think about it, here in the U.S., and I'm sure in other parts of the world, not all other parts of the world, but at least here in the U.S., bank accounts are offering 5.5%. So Americans have to think: Am I going to get the equivalent yield in the stock market this year, or would I rather just kind of move some of my money to cash, to the safety of cash, and earn this 5.5%, and instead of taking the risk, the market risk? And that's what everyone's thinking, and that is why stocks are lower, because it's opportunity costs, not just in terms of return opportunity, but also in terms of risk opportunity. So that is why stocks are lower as yields rise, and the U.S. dollar is, trading at its strongest level year to date, and bond yields are up. So let's really see what Fed Fund futures are doing. And I taught you guys last week, and those of you that are new, you can just Google this. Let's actually Google this: CME Fed Fund futures. Click on that, and then you click on the CME Fed Watch tool. So I'm kind of showing you how we're doing this, and you will see March, the market is looking at a 85% chance of no change, which, I think is the 15% is overambitious. I think it's pretty much 100% chance of no change by the Federal Reserve. In May, it's about 65-35. And so 65% chance of a rate cut in May, and a 35% chance of no change. Pretty much, I would say it's at 50-50 chance. And in June is when we get some serious odds. The market's pricing in basically a 94% chance. So completely priced in the first interest rate cut by June. So certainly by the summer, we're going to have an interest rate cut. But right now, it looks like May is still a bit of a coin toss. And that is why I am bullish dollars. I am bullish dollars because I think that the Fed confirms there'll be no rate rise in March. U.S. data has been very good. It was not just non-farm payrolls. It was ISM manufacturing, retail sales, inflation. All of that is positive. And, the market, the investors are overpricing rate cuts. So the dollar, I'm bullish dollars. Now, we have fewer U.S. economic reports this week, far less market moving U.S. economic reports this week than last week. The most important piece of numbers data on the calendar is ISM services. And normally ISM services is quite important because the U.S. is a service-based economy, but it matters far less when NFPs is out already, because ISM services is oftentimes a leading indicator for non-farm payrolls. And I would say that in general, the manufacturing data was good, the non-farm payrolls was good, so service sector activity should be strong. So I got a great question here from Max. Do I really buy that good jobs number? It's hard not to, Max, because not only did we get a blockbuster jobs number, but also the November data was also revised higher. Now, of course, a lot of American corporations are beginning to announce layoffs, and we're seeing that in the bank sector, we're seeing that in tech sector, we're seeing that in the entertainment sector. So those numbers could seriously weaken in the coming months. But until they do, as the Fed is telling us, until they do, we've just got to, assess the incoming data and react accordingly. And right now, the incoming data that we're getting is telling us, one, January was a fantastic month for job growth. And you know what? November, December wasn't all that bad. And, this soft landing could be, no landing and maybe reacceleration. I mean, that's obviously too ambitious, but maybe a recession will be completely avoided in the U.S. This year, which would be interesting because typically when the central bank begins a rate cut cycle, that coincides with a recession happening. Now, of course, that could be a shallow recession, but still coincides with a recession happening. And the fact that it may not happen because of the data is definitely something that I think investors are potentially looking forward to. So I'm bullish bullish dollars this week. I'm bearish euros. We don't have much in the way of Eurozone data, but what we did have was Eurozone PMIs. And Eurozone PMIs have been terrible. They've been below 50. And the 50 mark is basically the line that separates boom from bust. And so they're below the 50 mark. And, just telling us that the Eurozone economy is really weak. It's not been above 50 since last July, which basically means that the manufacturing and service sectors have been contracting for the past 7 months. So that's terrible. And the reason why euro is lower today, we actually sold euros this morning at BK Traders because euro dollar was in our zip sell zone. We're still in this trade right now. It's a very slow mover. The one that actually has been moving more quickly is Aussie, and I'll explain later why I got into that trade. But I'm short euros because I'm bullish dollars and because the Eurozone data just hasn't been great. And this week we only have the Eurozone PMI revisions, German industrial production, German factory orders, kind of important, but not tier 1 data. Sterling is actually the day's worst performing currency. We went long euro sterling this morning, very short move. It didn't really give us much, but it did pop up a little bit as the zip buy signal was forming. To be honest, there wasn't any specific data or specific news that caused sterling to underperform euro. But I think the BOE rate decision is over. We've got GDP next week. The market's looking at a potential contraction for GDP next week, and so all of that I think is part of the reason why sterling's underperforming. But the BOE they met last week, and they basically told us we're not ready to lower interest rates yet. And so I'm still going to hold on to that bullish view on sterling, although we'll have to see because it's really based upon the dollar views. Now the Australian dollar, though, I'm very bearish. We've got an Australian rate decision this week, the Reserve Bank of Australia, and everything's been terrible. Jobs reports been terrible, inflation reports have been terrible, PMI's reports have been terrible, and retail sales have been terrible. And so all of that tells me that the RBA needs to be a little bit more cautious, and that is why I decided to sell the Australian dollar, right at the start of the New York session, because I think that the RBA is going to end up being a bit more dovish this week. Now, the Canadian dollar, this is also an important week for the Canadian dollar. We have Canadian IV PMI numbers due, and then most importantly, Canadian jobs report due at the end of the week. So those two are very, very important numbers for the loonie. And I am short the Canadian dollars and long US dollars because data from Canada has been quite weak. And with dollar CAD, this is actually a trade I had on last night because we had a zip buy signal, and this one's actually moving quite nicely. We're almost to target here. And the reason, and we went long dollar CAD at 134.80, so we're about 8 pips from target here. But I think those job numbers are going to be weak. I think that the manufacturing data is going to be softer. But the main thing is that oil prices have fallen a lot, and that drop in oil prices is bearish for the Canadian dollar as well. And also, most importantly, I think I'm bearish stocks because I think that the sell-off I think that the Fed's less dovish views and the rise in yields is going to be bearish for stocks, and a sell-off for stocks is negative for the Canadian dollar. The New Zealand dollar, I'm neutral bearish. Kiwi, there's not much going on this week. We have one piece of data that we'll talk about, but really it's based upon the market's appetite for US dollars. And I think the dollar is going to continue to rally, and that's going to be good for the dollar, and that's going to be negative for Kiwi. I'm also neutral yen and neutral Swiss franc, although I'm actually more bullish Japanese yen because I think that correction in stocks could be coming, which would be negative for carry trades. I've got a great video on forex carry trade strategies for 2024 on YouTube that talks about why I think that this is going to be a year of correction for carry trades. Now let's take a look at the economic calendar, and I'll look at the charts. Many of you are asking about charts, but I'll look at the charts after we look at the eco calendar. So in terms of the data, last night we had weaker Australian trade data, adding to the pressure on Aussie. The PMI numbers were revised upwards, but still, not great news. The Chinese data was weaker. Now, this week we do have 2 pieces of important Chinese data. This piece, and end of the week, we've got inflation. Chinese markets were on a roller coaster ride last night. And that roller coaster ride is kind of the reason why stocks in the US are lower, and also why the Australian and New Zealand dollars are lower, because Chinese stocks have really been sliding. There's been a little bit of support from the Chinese government. Investors are holding out hope that the Chinese government is actually going to come in with a more significant fiscal stimulus package at after Chinese New Year, which is this weekend. And so, they're really, really watching and hoping for this, because China's been putting all these little band-aids on the market, preventing short sales, preventing, this and that, but they really need to come up with that stimulus package. Then this morning during the European session, we had stronger German trade data, but the details exports, which is really what matters, was much weaker. The Eurozone PMIs were slightly revised higher for the Eurozone, but not much, and still below previous month's levels. UK numbers were slightly better. Market didn't care about that much. Today, 10 o'clock, we've got ISM services. So this is important. And given the manufacturing improvements as well as the non-farm payrolls upside surprise, this number should probably be stronger. Tonight, we've got the RBA rate decision. And that's where I think that the Reserve Bank of Australia could end up being a little bit more dovish. And then as the week progresses, as I said, this is not, we don't have as much market moving data this week as we do last week. Tomorrow, we've got IV PMI numbers, and that could end up being a little weaker. We've got New Zealand labor market numbers, and that's where the New Zealand data could be a little bit stronger, because business and consumer confidence is up. And then we have on Wednesday, Canadian trade data, US trade data, not huge market movers. Swiss labor market numbers, which is not a huge market mover either. I want you to notice we got a lot of Fed speak. Mester, Kugler, Barkin, the Bauman, the Fed quiet period is over. And because the Fed quiet period is over, a lot of Federal Reserve officials get to speak, and investors will be listening in very closely to see whether or not they agree with Powell that March rate cut will not happen. Then we also have the Chinese inflation data, and that's going to be very important because China has been battling deflation. As you can see here, market expects deflationary forces to persist and actually continue to grow on an annualized basis. We have no major data on Thursday with Japanese Eco Watcher survey. Jobless claims have been a bit more market moving than we expect, so that could yield a little bit of movement in the dollar. And then on Friday, we have final German inflation data, not a huge mover. The main release will be the Canadian labor market numbers, and a little bit of a rebound is expected after the horrendous numbers in December, but the unemployment rate is still expected to increase. So overall, not a lot of market moving data. Now let's take a look at the charts. So taking a look at the charts, I'm just gonna pull up my, and I know you wanna see the gold charts, we'll take a look at that. But first we're gonna look at currencies. So as I told you earlier, I'm short euros. It's below all of the major moving averages. And if it closes below this is the lowest level we've seen euro dollar year to date. And I think that, first of all, there's a swing low support at 107.23. Euro dollar loves to magnify towards the round numbers. So I think it's going to get down to 107.23 and maybe even 107 figure this coming week. Dollar yen, we broke it above the all of the major moving averages. Opening the upside for a move up towards 150. So we've got, I think we've got a little bit of resistance that's got to clear over here at 148.70, 148.80. But I think overall, dollar yen's a little bit more tricky because it likes to pull back. So if we do get a pullback towards the 100 SMA, especially around the 148, 147.75 region, I think that would be a buy for another leg higher. Dollar Swiss is already moving upwards. It's powering higher, and I think that dollar Swiss could come up to this region here at towards 88 cents in dollar Swiss. Aussie dollar, I already told you I'm bearish Aussie dollars, and I think Aussie dollar could move quite a bit lower. And I think that Aussie dollar could come down to 64, definitely down to 64.50, possibly even lower if the RBA is dovish. And then Kiwi is falling on risk off flows. The reason why I didn't touch Kiwi today is because we have 100 SMA support, but and this is also, if you drew a horizontal line, this is also pretty significant form a resistance level from these levels here. You can see it if we remove all of the indicators here. We got resistance here, and so this is an important level for Kiwi dollar. Pound dollar, I actually don't really trade pound dollar because it's a monster in terms of volatility, except through the crosses like euro pound. But pound dollar definitely looks like it could find some support here at the 200 SMA and could bounce up before moving lower. But I think it's clear that we've broken this trend line here in rough drawn trend line in pound dollar. And even this horizontal line, there's so much support here that we've broken. The pound dollar, I think, is headed lower. Dollar CAD, I'm long dollar CAD. BK traders are long dollar CAD right now. I think it's going to come up to this resistance area here around 134.50 at the 100-day SMA. Also, Swiss yen looks like a really good short. We had tried to sell it this morning, got a little shaken out, but it's moving below the 20 SMA, which I like a lot. We've got, you know, it moving below all of the major moving averages, a lot of room to fall, and also the 1 hour chart looks super bearish as well. So if you're looking at new trading opportunities, I really like Swiss yen to the short side, which is consistent with the Dow futures moving, or equity futures moving lower. We're already short Aussie yen, and you know, I also think that that's going to move lower as well. As for gold, gold is, you know, big move lower, breaking below some significant moving averages. I think the near-term move in gold is going to be back down to 2,000. So I think that if you're going to lean in any direction, it should be towards 2,000 in gold. I know Boris will have more to say about gold, but let me open up the floor. Any questions that you may have? And I'm happy that so many of you are here today and learning about fundamentals, because fundamentals matter. So I have one question here. Do you think we'll see much volatility this week as we don't have much data, like NFPs to provide continuation? I don't think we'll see as much volatility, but I do think we could see cleaner moves. And for us trading ZIP, weeks where we don't have all these high volatility moves actually is good for us. And I think, you know, will work in our favor, because these are the weeks where we kind of thrive, and where we get much more slow and consistent moves, pure movements. Because when you have big data, there's a lot of consolidation and hesitation before those big releases, and we'll have less of that this week. Any other questions? All right, I'll let Boris join in and share his views. Why do you think Swiss yen falls when stocks fall? That's a very good question. And I want to show you this chart here. Let's remove the indicators. That's what I was trying to do. And let's add in the US 30. And you know, you may know that I love correlation charts. I'm going to pin this to the left scale, and just look at this. Look at the strong relationship. And even if we go to a weekly chart, look at the strong relationship. So that is why we have to respect this relationship. And if stocks fall, you're going to expect Swiss yen to fall as well. RBA bullish or dovish? I think that dovish, yeah, if you listen to the beginning, I encourage you to listen to it back, because we laid out how retail sales was weak, jobs numbers was weak, inflation is weak, and PMIs were weak. All reasons for the RBA to be more dovish. As for dollar yen, I think that it's going to rally, but I would prefer to buy it on a little bit of a dip down to this region here, which is probably about 148 even. All right, Boris, do you want to fire away and share your views on gold and how you've been trading it?
Hi guys, let me grab the screen. Let me see if we can see my screen. Okay, so we've actually had a really excellent morning already. We had a great early morning trigger in US 30 that made us $50. Unfortunately, I did not get a chance to pick that because I was away from the screen, but gold has been a screaming trade for us early today, and we took very, very good advantage of it, trading our sort of one big trade a day. We took 3 out of it, but it actually went all the way down to 6. Gold has been in a clear downtrend, as you can see on the daily bars, 1,300 bars to the downside on the 1 hour chart. You know, it's under a lot of pressure. The interesting thing for me as far as gold goes, though, is, does it survive on a longer term basis the $2,000 support level? That's going to be really, really key. Gold has had everything thrown at it, in terms of lower interest rates, higher interest rates, the Fed not really willing to, cut rates as soon as everybody thought they would. And yet I think it still, holds strongly above the $2,000 level. And I think that, the critical thing with gold, of course, fundamentally will be, as we go forward, whether the budget issue becomes a non-issue, at which point I think gold collapses and probably moves back to get another fake out for the bulls. Or if we start to see treasury auctions having problems, that's when I think gold really starts to take on a much stronger bid, because gold is always basically trading as an anti-fiat, trade, a trade against the full faith and credit of the United States of government. So for now, full faith has been restored, interest rates are higher, and gold definitely suffering on a technical basis. We're taking advantage of all of that quite nicely here to the downside, and we'll have to just see how the $2,000 support holds, how the week shapes up. For now, it's gold to the downside, equities mildly to the upside, but they're struggling a little bit. We also have one more trigger in NASDAQ, which is just floating. It's really sort of neither there. It's kind of flat. Equities have had a very, very strong run for the last 3 or 4 days. I saw an interesting stat from one of the prop firms. I think S&P Capital did a study where they talked about the idea that if the move in the equity market happens in the second half of the day, so from 12 noon till 4 p.m., which is what we saw on Friday, the next following day, possibility of a follow-through is actually quite little. The possibility of a sell-off is about 60%, and the possibility of a follow-through is only 35%. So we might get a knee-jerk move up in the equity market on the open, but I'm a little bit dubious about any further runs in equities for time being. It's really kind of a little bit of a tired trade. In the meantime, all of the early trades we've done today really worked very, very nicely. I'm going to be trading live in about 20 minutes. So for those of you who are interested, come join me. For those of you who want to join us, Kathy has a link in the description in any of her videos. Just use that discount link and come join me. I revamped our ultimate scalping algo strategy during the weekend to make it even better. I included a trend component into it, which is going to make it even sharper and easier for everybody to trade. So I'm going to go through that in my live. Hopefully you're all going to enjoy it. And I'll talk to you guys in a few minutes. Everybody have a great day.
Yeah, so we got a couple of questions here. I do watch the dollar index quite a bit. And if you're trading gold, you absolutely have to watch the dollar index. There's no doubt that the dollar is driving, the rally in the dollar is driving the move in gold. So if we believe that dollar could continue to rally, then gold should continue to fall. Now, in general, in the long term, we are bullish gold, but you're going to have to wait. And that's where fundamentals plus technicals is so important. Just because we have an opinion and a view doesn't mean it's time to buy. You have to be flexible in that view and reactive to what the market sentiment is. So until the technicals are in sync with the fundamentals, it's not time to buy gold. You want to wait for that turn to happen before really getting into the market. So that turn, then the clue, so if you're trading gold, is to watch the dollar index. And on our YouTube channel, YouTube/BK4F, I've got a number of videos. The most recent one on gold that basically shows you correlation charts and explains some of the things to watch if you're trading gold. Otherwise, like Boris said, we thank you all for joining us, and we will see you next Monday. In the meantime, I wish you all a great trading week. We do this every single day with our BK traders. So if you want to become a member, please check out the discount link in one of our other YouTube videos, and we're happy to share with you our trade ideas like the ones we took this morning, like the one you're looking at with Boris, Boris's chart right now, and you'll be able to participate in the live trading session that Boris does at 9:30 a.m. New York time. All right.
Yeah, absolutely.
Thank you so much.
We'll see you guys later.
Have a great day.
Everybody have a great day. Bye-bye.